Hello and welcome to Commodity Champions, your weekly dose of what's brewing in the commodity space. I'm Manisha Gupta. Well, first up, India's palm oil imports surged 74% to 763,000 tons in the month of May this year, and this is from 439,000 tons a year ago. This is as the world's largest vegetable oil buyer stocked up the commodity to meet the rising domestic demand. India is the largest buyer of palm oil, and Indonesia is the largest producer of palm oil in the world. Of all the edible oil imports that India does, nearly 50% of all of that is palm oil. Joining me to discuss these numbers and, of course, the growth forecast going forward is Ina Hagniningtyas Krisnamurthi. She's Indonesian ambassador to India. Ms. Ina, thank you so much for joining us. Indonesia is the largest producer of palm oil. India is the largest importer and consumer of it. How are you looking at the imports that we've done in the last couple of months now, which has seen a surge of 74% on a month-on-month basis? And what's your sense on the demand and the market dynamics going forward?
Thank you for having me. We are closely monitoring the significant increase in palm oil imports to India. Two important notes to understand. First, the sharp increase is only for the period of 1 month, which is May this year. Whereas if we observe the increase from 22 to 23 is only 8%. But I have to acknowledge that both trends are driven by rising domestic demand, increased food processing, a growing middle class, and also urbanization. This surge highlights India's expanding need for palm oil, emphasizing the importance of a stable supply chain to meet this demand. We also know the information that we receive from the Solvent Extractors Association, stating that the supply chain disruption in major edible oil producing countries like Argentina, Brazil, Russia, and Ukraine are causing the surge of import of palm oil in India. These disruptions underline that the vulnerability of global supply chain to geopolitical tensions and other challenges. And in response, Indonesia and other palm oil producing nations, Malaysia, Colombia, and so forth, are committed to ensuring consistent production capacity, maintaining supply chain integrity, and optimizing transportation and logistics. These efforts aim to meet the growing global demand, with India being a crucial partner. My next point is taking lessons from the disruptions in other edible oil supply chains. We recognize the importance of anticipating and mitigating potential impacts on the palm oil trade, including market speculation and stockpiling that can further influence price volatility. We also believe that any kind additional disruptions in the supply chain may result in more volatility and uncertainty. By addressing these challenges proactively, we hope, Indonesia hopes, that we would establish a more resilient and reliable supply chain for palm oil.
Well, that's good to hear, but what's also your sense on the future projections and the kind of imports that India will continue to see in coming years? Is there any calculations that you've been working with?
We have collaborated with India in continuing that product or strengthening that production domestically, because seeds and productivity, we also need to learn because of the climate change, because of the disruption of global dynamics and so forth. But in the future, if you may recall, last year, I think India successfully hosted the G20 presidency. India promote life, and it was overwhelming welcome by all members and observers. We also strongly support life because it is an elevation of what we want, what we have pushed since our presidency of G20 in 2022 on sustainable living. So it shows how strong actually collaboration and what we actually want as two countries from the global south. From that notion, I think to answer your question is, I would like to again express in the future, not so far away, in the near future, the collaboration between both countries on sustainability, be it in live or more technical level issues such as palm oil production, is part and parcel of our efforts in enhancing our diplomatic ties. More importantly, we want to address the global concerns on deforestation, on climate change, and as well as promoting the Sustainable Development Goals. So I think by committing to sustainability, both countries can strengthen their bilateral relations. Now we're entering 75 years. And also we promote inclusive growth because palm oil always involves smallholders.
So while you have spoken about sustainability and deforestation concerns, but there are various global dynamics at play here. I mean, post-COVID, we did see Indonesia also get into some sense of protectionism, but all of that dust is settled now. How are you looking at the global trade, and also what's your sense on pricing going forward? Because the palm oil prices have been very volatile, especially in this year.
For the demand, I think we learned since past, many years that edible oil, it's actually not depend on so much on one particular edible oil, is pull and push factor in the regard of edible oil. So I believe that with the strong demand from India, not only for edible oils, but also for industry, I think the demand on edible oil, including palm oil, I want to highlight palm oil because Indonesia is the biggest producer, but not forgetting that edible oil means also other edible oil. I think it will be increasing, be it in the form of edible oil, but also as the raw materials of many products like cosmetics, like medicine, and so forth. And secondly, like I said to you, I mentioned since the beginning that we need to anticipate and mitigate potential impacts on any edible oil trade, because we can see that from COVID-19 and then after that, war in Ukraine, and as well the war in Middle East, in Gaza, they make volatility of price as our main priority of concern. So I think in the future, there is a need of ensuring that the supply is sustained, the demand is also managed in a way, and at the same time, we also understood that productivity of edible oil is also the second main concern of all of us, since it is climate change in front of us.
Apart from that, it also is about biofuels. And while, of course, India is looking at ethanol very strongly, and we're looking at it coming in from sugar and various grains, we do understand that when it comes to Indonesia, the mandated palm usage in ethanol is something that you seem to be doing quite well with. So what is it that you're looking at in sense of diversion of palm in ethanol there?
The learning is not without challenge, I believe. The habit, I think that's why I mentioned about LIFE, because LIFE builds policy toolkit to enable people to adopt the sustainable consumption choices and habits. So I believe that basically edible oil as well as feed industry, in a way of related to palm, it needs some change in habits, some change also in the way we see the future. And you need to understand that I think what we learned in the past, ISPO, for example, why we are stringent on the sustainable part, because if we don't have a certification that is mandatory, then it is possible to have a palm oil that is, how should I say, relevant into the need of current, especially with 15 people did directly and indirectly impacted by the industry. We have in Indonesia also smallholders of farmers, almost 3 million. So I think what we see, the sustainable certification needs to be on par with what we are experiencing right now, which is the global dynamics, the climate change, and so forth. So I think India, the good things about India when they want to, you want to develop your own domestic plantation, you start from zero, and then you can start with the seeds. You can start with the research and development. You can start building the governance of it. So I think we need to learn from each other what best to overcome, what best ways and means to overcome the challenges currently.
All right. One final question then. There's a new government at center and we are looking and preparing for the budget in July. Are there any expectations as a big partner when it comes to not just palm but various other commodities as well that you would perhaps have from the government reforms and budget?
My answer would be very simple and very short statement, which is we need to make sure that any policies, be it our policies or other countries' policy, needs to be fair and balanced.
Well, that is well said. Mr. Krisnamurthi, thank you so much for joining us. Appreciate your time here at CNBC TV 18. Well, on that note, it's time for a break, but don't go anywhere. On the other side, we decode the rise in crude oil prices. Stay tuned for that. Welcome back. You're watching Commodity Champions. Let's now shift our focus to the crude oil prices, which are headed for a monthly gain of around 6%. Improving U.S. demand, a fall in inventories, and escalating geopolitical tensions have been pushing prices higher, which are trading at a 2-month highs. We also put spotlight on the renewable energy opportunities and, of course, India's import of LNG, which has been on a rise as well. Joining me now to discuss this further is Joel Hanley, Global Director, Crude and Fuel Oil Markets, S&P Global. Joel, hi, thank you so much for joining us. First of all, on the crude oil prices itself, 6% of a hike. What do you see as a major reason for this run-up?
Well, the geopolitical tension that we've seen over the last 6 months or so doesn't really seem to have impacted the price particularly. We saw the October 7 attacks in Israel and Gaza, and since then, of course, there's been further geopolitical unrest in the Middle East. But I think there's been a cushion. There is clearly enough supply to keep a dampener on prices. However, we are seeing a bit more demand recently, and I would say those geopolitical tensions are increasing. We've seen further attacks on shipping in the Red Sea just this week, and there does seem to be an underlying sense of strength that wasn't there a couple of months ago.
Well, and looking forward as well, the third quarter, the expectation is that the demand will improve. We perhaps could see a deficit as well going forward. What's your sense on demand, supply, prices for the third quarter?
It's an interesting picture right now. I mean, the supply-demand balance in oil is always interesting, but S&P Global Commodity Insights analysts still see the price for the year being between $85 and $100. However, the OPEC cuts and the revisions to the OPEC cuts does add a different slant. It'll be interesting to see over the next year whether OPEC will turn the taps on and go for something of a market share strategy, as we saw 10 years ago. Let's not forget, 10 years ago they tried to knock out US shale production and failed. And that strategy wasn't seen as much of a success for OPEC. But since then, OPEC now has its OPEC Plus allies as well. So I think there's a greater sense of market influence that organisation can have. So considering that the three of the largest suppliers in OPEC, they being Saudi Arabia, the UAE and Kuwait, they're holding back about 5 million barrels a day. Now, if they come on market quite quickly, then of course I wouldn't consider that to be bullish for the price.
How would you, I mean, as you said, you expect demand to improve going forward. So when we look at Asia, while the China data is still uneven, how are you looking at the Indian demand going forward? And overall Asia, what's your sense?
Indian oil demand growing within the next 5 or 6 years to about 5.5 million barrels per day, so up about 1 million barrels a day from where we are today. I would expect to see Indian demand growing fairly steadily this year, maybe slowing down for the next 2. That's the view of our analysts here at S&P Global Commodity Insights. China, as you say, uneven, but always the one to watch. Everybody's always watching China when it comes to oil prices, obviously. But I think that there is a bit more volatility in the numbers that we're seeing out of there. So that will be the big surprise factor one way or the other. But I think it's too early to tell. Okay.
So a final question, and this is on geopolitics. I mean, you started by saying that the reason we've seen prices go up is because of geopolitics. I mean, is this one thing, one area that you would keep an eye on going forward as well? And is this that would impact the prices ahead?
Yeah, the map of global trade flows has been upended since the last 2 years, right? Since Ukraine was invaded by Russia, and of course, yes, there's the further conflagration in the Middle East. I think Putin's visit to North Korea recently signals that the Ukraine conflict isn't going away anytime soon. And of course, one of the major advantages, one of the major opportunities of that conflict, particularly for India, has been the huge supply of cheaper Urals crude oil coming into the region. Now, Russia supplies around 40% of India's crude oil, so that's been an exciting development for India as it tries to develop even further its international energy market. I would also say that the OPEC situation, of course, will influence India's buying choices. They're a major buyer from Iraq, of course, but also there's other 3 countries I mentioned earlier, Saudi Arabia, United Arab Emirates and Kuwait, major suppliers to India. If they turn on the taps, then India is really well placed to benefit from as a swing buyer from all around the world.
All right, that's good to hear. And as you said, $80 to $100 a barrel of a range is what you can see in third quarter. I mean, that's huge, and that's quite on the bullish side as well. But Joel, thank you so much for joining us and making sense of what's happening in crude oil prices. Let's shift our focus now and talk about the renewable energy opportunity. Joining for that is Francis Browne, who's Editorial Director, S&P Global. Francis, hi, thank you for joining us. And how would you look at renewables, regeneratives when it comes to India in sense of demand?
Demand in India is very strong, and it will continue to be strong. As we've come out, as the rest of the world and all the world has come out of the pandemic, India has come out extremely strongly. And power is fueling a growing economy. And as that grows, it will increase the need for power and increase the need for feedstocks for that power. So it's very interesting to see India is investing in new coal-fired power stations, about 80 gigawatts, about 25 units. And that's an interesting situation. It will mean new boilers, and it will consume a huge amount of domestic coal, but also blended with high CV coals that is imported too.
Francis, even as you put out all those investments India has been making, but do you see that pace of investments continue going forward?
The increased investment is global, and every economy is challenged to increase the investment in renewable energy, but also it has a great opportunity to produce the technology and the capital equipment needed. India is no different to the rest of the world and is advancing particularly in solar modules, panels, and increasing the amount of solar in the energy mix every single day. This actually creates some volatility in the price, but this is a challenge that has been faced in every country across the world, and India will meet this challenge.
So while it is about power, but it is also about regeneratives and renewables, as you said. We've seen good amount of investment here. How are you looking at market from a point of view of biofuels in India?
I think so, but I think wind and solar will still form the largest bulk of power generation. Obviously, there is a need also for EVs in terms of transport. Mobility will have other solutions where there will be biofuels involved. But for power production particularly, it will be a combination of baseload coal and an ever-increasing amount of solar and also wind, with augmented by some gas, and obviously nuclear stays in that mix too.
And Francis, would you say that for India to continue to go into that direction, the next push perhaps would come in from the reforms or perhaps the budget which you're waiting right now?
I think India will be pushing ahead, particularly with renewables. But I think also India has a good head on its shoulders, in so much as the policy decisions will be about what India needs today as much as about what the world needs in the future. So to meet net zero goals of 2050 and 2060, these are ambitions that the world has. But the reality for India is they need to meet power demand growing at around 6% per annum right now. So the policy decisions will be focused on meeting that particular need. In time, of course, the world will come, including India, to use far more renewables in the mix, in its fuel mix going forward. But for now, the important thing is to worry about 2025 and 2026, rather than be fixated with what's happening in 2050.
All right. A final question then, Francis, and this one is on geopolitics. So while all countries are moving in the direction and to their time targets in sense of net zero, do you see that being slowed down or getting impacted because of the geopolitics?
Well, that's fascinating to me, because actually it is one of the most important points that is happening. If the whole world is transitioning at the same time, there will be new winners and some losers. And it's very interesting to me that those that are building their value chains and in terms of creating new technologies, particularly solar panels, solar modules, and particularly wind, will be the winners of the future. And those that can build them most quickly are the ones that have a much shorter permissioning time to get projects up and running and build their domestic supply chains. This is not happening in other countries, particularly in Europe and particularly in the US. The lead time for delivering a project is going out now 10 years or so, whereas in China, the lead time is around 3 years. So for India, I would say if they can get that balance right and build a domestic supply chain to fuel a renewable and sustainable future, then they will be one of the winners when we look back at 2050.
Well, Francis, thank you so much for joining in. So, well, yes, a huge push and some reforms is what India can look at with the kind of power demand that we have, as you said, 6% per annum, and it's expected like that for 2025 and 26 as well. Well, moving on from crude and from renewables now to LNG. And to talk about that, joining me now on the show is Kenneth. He's Associate Editorial Director, Asia LNG, S&P Global. Kenneth, thank you so much for joining us. And if you look at the numbers that we've seen for the month of May and for June as well, the expectation is that India's demand for LNG and the imports therein are on a rise.
So India's appetite for LNG has not abated in the last year. What we have seen in the first 5 months of the year is a 25% volume growth of imports, surpassing 10 million tons. And that's higher than the same period that we saw last year by 25%. The key factor supporting import growth for LNG is, of course, prices. And LNG importers in India, as well as other regions like China, continue to be extremely price sensitive due to the replaceability of LNG from competing fuels. So LNG needs to be cheaper in the international market in order to stimulate demand. And we've seen that at least in the first half of this year, where India had a voracious appetite to buy LNG off the spot market in large amounts. And this really supported growth, at least in 2024 so far. So what we are looking at would be whether lower prices in the LNG market could result from increased supply from international LNG suppliers in the US, in Qatar, over the next few years that could keep international LNG prices low, which would in turn continue to support demand growth for India. I think it is too early to say that LNG appetite for India will wane compared to in previous years, because domestic gas production as well as production from other competing fuels like coal, naphtha, and LPG still isn't sustaining at a very strong level. So we need to monitor this demand growth and just keep a track on how low prices can continue to go for LNG.
Kenneth, I have one more question for you, and this is about the India energy policy. How do you see that changing? Because now there are options, and as you said, India is a swing buyer with various countries here. What is it that you think India needs to do now for a proper mix?
I'm hesitant on providing advice to the government. Of course, there has been a lot of talk around a change in the GST regime that would stimulate and unlock a new wave of demand. That has been considered and been talked about for a number of years. I think other reforms, with regards to more transparency over pipeline gas capacity, could also be considered. On the LNG front, certainly there could be a more concerted effort to increase the transparency and monitor LNG inventory levels across terminals a lot more significantly, and this would help companies importing LNG to accurately assess the demand and supply situation for the upstream LNG cargoes.
We take that point well. Well, yes, change in GST would stimulate the markets here, and transparency and monitoring terminals and pipelines when it comes to gas, another thing that perhaps S&P has its mind on. Kenneth, thank you as always for joining us and making sense of what's happening with the energy markets globally and especially India as well. But with that, it's a wrap on this edition of Commodity Champions. Thank you for watching.